Morning all. How are we all doing? Happy Monday. How is everybody today? All wide awake? Morning Christian, Tom, Neo, Peter, Danny, JC. How we doing? Hannah's, Grateful Buster. Good night from SoCal. Oh, in Southern California, I'd imagine. Morning Baggy, Andres, Jerry. How we doing? Can have a look at the FX market in a bit. There's been quite a bit of movement over the weekend by the looks of things, because I seem to have banked. I've literally just opened my terminal this morning. I haven't had a look at it. I normally have a look at it as soon as I wake up, but I haven't this morning. Yeah, so basically looks like we've got loads of movement. So bear with me a sec. I can hear myself in the background. Sorry, I'm just getting stuff in the right place. Oh, how many terminals have I got open today? So yes, there's been a fair bit of movement by those things, which is good. Morning, Virginia. It's time. Antonius. So yeah, banked 0.85. We'll have a look at all that in a minute. It looks to me like the US dollar has had a big drop this morning. We've got a gap down on the US dollar yen. All the yen pairs have got a bit of a gap down today. We've got ADRs across the board on the yen pairs. So we'll have a look through all of this and try and dissect this in a minute. But all the movements kind of going in the direction I want. So it's good. But we'll see. Morning, Paolo. Just quickly go through the news before we get going on the indices. So we've had G20 over the weekend. There's no news at all today. So we got new loans from China, which have come out. It doesn't affect us at all. On Tuesday, tomorrow, is our first news. Where's my pen? There. We've got the claimant count tomorrow morning, pre-market. Apart from that, that's it. First real news is GDP for the pound on Wednesday morning. And then we've got the US dollar CPI, which is the big one this week. So the CPI figure is the inflation figure, which is what affects interest rates. So this is the biggest news we've got coming up this week on Wednesday afternoon, which is an hour before the market open. Then we've got the unemployment rate for the Aussie, which is an important one on Thursday morning. Then we've got the euro rate. Again, massive one for the euro, although this is going to be a freeze. The reason I think this is the biggest news event of the week is because I'm not sure the market's going to have a massive reaction to this unless we get an unexpected result. If we do, then obviously we will get a big move. But that euro rate, we need to keep a close eye on that. We've got PPI and retail on Thursday as well for the US dollar, as well as the unemployment claims. A lot of news coming out for the US dollar this week. We've got the ECB press conference at 1:45, so that comes out half an hour after. So somewhere around about 15 to 30 minutes into that press conference, that is when we'll see the movement happen. So the move on the euro will actually happen somewhere between 2:15 typically. Then on Friday, we've got not a lot. We've got Michigan. So yeah, all the news is focused around Wednesday and Thursday this week. Weekend news, not a lot. ECB to remove some leveraged loan capital on some banks, which is not important. Apart from that, there's nothing else really. So there was nothing from Japan overnight, which is good. So, well, not good. Depends whether you want the intervention or not. But so yeah, nothing came out of Japan overnight. Obviously, we've had some big moves down. I'm just seeing what exposure I've got on the yen. I've literally just got that US dollar yen on. And that's just hit ADR and it's come out of a propulsion gap. I might take that off. I don't like this reaction down here off of 125 ADR off that propulsion. Look, it's bouncing off of that support. It's a gap down as well. Gaps get filled. So I'm just going to close that out because I might as well just bank it. Take the money. It's 1/3%. Might as well just stick it over there. Be done with it. Gets me back into positive for the month. So yeah, so we'll see what happens with those. We've got 4 minutes to the open for the indices. Morning, Mac. Morning, Paolo. Konnichiwa. Got a gap down on DAX this morning. So we are looking for the upside gap fill on DAX still. So this gap was formed back here at the beginning of August. Since then, we've had, obviously, as we know, August is a terrible trading month. We had very little movement in August. Market hasn't managed to get itself back there. We double topped basically, and now we've put in a potential higher low on Friday last week. And double bottom bounce. So potentially this could be the start of the move up for that gap fill, although we have got a gap down play today. So there's a gap down initially at the open. Once that's complete, there's a possibility of rallying back up to get this gap done at some point over the next couple of days, possibly this week, obviously with all this US dollar news we've got coming out. So no idea where it's going today, obviously. But upside risks today are the high there, which is in that propulsion gap, which is that basically support, turn resistance. So this propulsion gap, upside risk. Apart from that, basically it's ADR because we're coming up to 125 ADR and then 175 ADR, which is last week's high. So if we go down, obviously downside risks are the gap fill and then bounce. If the gap fill plays out and then it continues to drop, we've got 150 ADR all the way down to a double bottom for Friday. So there's an absolute ton of movement today available. But obviously we're waiting for Wednesday, Thursday this week. Morning, Amy. So there's your news covered. I've got a little bit of a different setup today. I've got a new VPS, which I'm trialing. It's a new company that have approached me with VPS offers. So I'm just trialing a VPS with them. So I've got the opening range breakout hedge version EA running on here. And on my local terminal, I've got it running, but I've set a new option in here so that basically it's got a visual mode where it will just draw only and not take trades. So this is taking the trades, and this should not take trades. It should be just visual only. It'll draw the lines. That's the plan. We'll see what happens this morning. Could be hideous. I've also just opened another account with Robo Forex. Whoops. Have I got that turned on? Better check that. New account. I've got a new one set up with Robo Forex here, which is a Prime account. I'm just trying to get to the bottom of this problem I'm having with terminal disconnection. So I've just set up another Prime account, and I just want to check whether it's the account or it's me or it's their servers in general. So I'm hoping I get a disconnect this morning and I can tell what the problem is. Okay, so there's your open. Going long on the DAX. Right, so that's pretty fast execution. That's good. So let me just check. So that has triggered. That's good. So that's worked. So we should have only taken 2 trades. Nope, it's taken 4. Damn, that doesn't work. Whoops. Well, let's go with double the risk this morning. Why not? I wonder if that's going to change the... Yeah, I changed the inputs after I put it on, didn't I? That was silly. So, long on the DAX. Breaks to the upside on the DAX. Obviously, we'd be looking somewhere in propulsion initially, so not far away from where we are now. For a bounce out of here. If that breaks, could go anyway, couldn't it? Looks like it is, which is good. I just stuck sort of $600 in this account just to test it. So hence why I'm risking 10%. Well, 20% because I've got 2 positions on. Put hedges on this as well. just in case. So haven't quite made it into propulsion, but we are broken to the upside. So we'll see where we go. Okay, so that's executed fine. That's good. Don't need to look at that anymore. Oh, excuse me. It's just something coming from Japan, from Matsuno. Monetary policy specifics are up to the Bank of Japan to decide. Yeah, we know that. Weird. Anyway. Goes down slightly, just in case we double bottom. Not a lot of volatility in there this morning by the looks of things. A bit quiet. Very quiet. We're just basically trying to hope that this terminal disconnects, and then I can just check this Prime account to see if this is disconnected either. I'm trying to determine whether it's the whether it's the Robo Forex servers that have this intermittent disconnection problem with, whether it's the actual account, the ECN that I've got running, which obviously if it is the ECN servers having this Prime account will tell me that, or whether it's my machine in general, which I don't think it is because I've got other terminals running which are not having a problem. Just about to get hedged on the DAX. Not quite. Thinking about it. Hedged on the DAX. Okay, so see if we can get that gap fill short done. Okay, so I'm just going to watch for a play down into the gap and see what sort of price action we get at that gap. Just see if we're going to do that and then bounce, or if we're going to fly through. If we're going to fly through, that's absolutely fine. We'll see where we go. Right, let's go over to FX. GMT4 is it? Okay. Morning, AZ. So just going to have a look at what's banked overnight because I haven't had a chance to have a look yet. So that US dollar yen, obviously that one I've just got out of, which was a very straightforward H1 M5 mean reversion trade. We sat in it for 3 days, didn't go anywhere, but that's now played out. Propulsion gap target. This is where I would have had my initial target. I had my target miles down, basically, just because we were expecting potential intervention from Japan. If they were going to give us a 4 to 6 ADR move, no point in getting out there. Obviously, we'd take the whole thing. So, but as we haven't heard any news from Japan overnight, I'm not expecting an intervention today. So I'm just going to exit that position there. Nice, quick, easy profit. Aussie dollar, US dollar, same thing. That position there, TP in propulsion, that's 125 ADR pretty much. This is part of a larger position. As you can see, I've got 1, 2, 3, 4 running on this. I've done this takeoff 3 times now. So took that one off there, that one again, added on, off again, added on, off again. If it comes down, I'll add it on, and I'll keep doing this and banking money as long as it keeps staying in this range, which we've been in now for 2 and a bit weeks. But But that is a good move up. So hopefully we now get a pullback and a rally. And that's where I'm going to exit the rest somewhere in there. New Zealand dollar, US dollar, same trade as the Aussie US basically. That was a 1 in, 1 out though. So in on the H1 RSI extension, M5 reversal alert in there. 4 days in, straight out in propulsion. Target hit, done. Pound US dollar. That was a drawdown control. Oh, that was from last week. Okay, so that's it. So there's those three. That's what's banked. And that's where I am at the moment. So I've got the Aussie dollar CAD. That's a single position running. I have to bank that as well. Aussie unemployment on Thursday. So we've got no news coming till Thursday. We are at ADR. Is it worth taking it off? Yeah, let's go for it. So, yeah, basically exit at the double top. I'm not going to hit that today. Aussie dollar, US dollar. Got that one on as we just covered that one, basically. So looking for this to hopefully be the start of this US dollar weakness and continuation. If we get decent unemployment on the Aussie this week, we could get a rally. If we get any kind of negative news on the US, this thing's going to fly. So I'm not worried about this position. I'm not worried about being short anything against the US dollar. US dollar's now had 8 weeks of sustained rally. Yeah, if you look at the Euro US dollar, which is next, come out to the higher time frames. Yeah. So you can see 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks, continual strength. This is the Euro US dollar is the inverse of Dixie, which is the US dollar index. So if you ever want to know what the Dixie's doing, look at the Euro US dollar. It's just the inverse of it, basically. So as you can see, the US dollar's been rallying for 8 weeks solid. We're coming down into support. We should be pulling back on this at some point. So just waiting for some negative US dollar news, basically, to kick in to give this a bit of a kick. But yeah, I've got one position on the Euro US dollar at the moment. That's the H1M5 mean reversion entry from last Wednesday, was it? Friday, Thursday, Wednesday, Tuesday. So that extension there, looking for a push back up into propulsion, which is about 150, 175 ADR from today. Single position on that one. Pound US dollar, been in this for pretty much a couple of months. Got into this one back in July. Just, you know, we've had no positive move on the pound. We've had lots of news which has been mediocre for the pound. So we haven't managed to get that rally. The US dollar's been on an 8-week streak. So obviously the combination of those two has pushed this one back down. I'm not in masses of drawdown. I'm just in the hole on it at the moment. So waiting for that move to kick in. There's that W. So this is the support that I identified last week. This high here and this low we had in here. That's where we got the bounce on Thursday. We came down, we put a higher low in, and now we put in a higher high. So the market structure has shifted to the upside, which is good. We just need a continuation. So there's your reversal alert in there. There's your retest. Did retest there, but that was overnight. So, so there's your W. New high put in. So we're looking for a pullback, longs up into propulsion. So not far away from getting out of this. I've got an aggressive drawdown control position on here, which I talked about last week. So I had one go at aggressive drawdown control on Thursday. That failed, took me out. I posted this in Telegram. I put my stop loss above support. I don't know why. I just did, which was obviously ridiculous because it came down, hit support and bounced, which is what it does. So that's where my stop should have been, but I just took a 0.5% hit because I was stupid. Put the position back on again. And that is why I'm close to ADR to exit on this. So any kind of negative news on Wednesday, we should get a rally. And obviously, if this US dollar continues to be weak, I could be up here this afternoon, 150 ADR. It's very easy. So looking to get out in propulsion. And US dollar CAD. So got a few positions on this one as well. Been in this for a bit. Entry on this was beginning of August. We've just ground, basically. The Canadian dollar hasn't managed to get as much strength as I was expecting it to get off of the oil rallies that we've had. So it's just weak at the minute. But obviously, with this US dollar potentially weakening, we might be able to get that kick started. So as you can see, my average is just about ADR. So I'm looking to come back down here. So looking for a nice deep pullback. If it is going to continue this strength, which I don't see any reason why it should, then looking for a nice deep pullback for another leg up. But I'd be more interested in it doing that. So that's what I've got on at the moment, 1.1% drawdown. I haven't managed to bank much this month, but that will change very quick. Just need some movement. Let's quickly look at the DAX. Not going for the gap fill. So we just got an inside bar. So there's your opening range, your 5-minute ORB. 10-minute candle is an inside bar. We've got 2 minutes left on this candle. Currently also painting an inside bar. So this is a 2IB setup, 2 inside bar. So contraction. So we will get a break at some point shortly. Break of that level there will give you the direction. Doesn't seem to be going anywhere at the moment. Really quiet today, isn't it? Right, let's look at ADRs. Morning, Daniel. Morning, Kennelly. If I didn't say good morning already. Quickly look at oil before we go into the FX pairs. So we've got that breakout on oil, but it's holding at the moment. So this is the range high break that we were looking for, which we've got. So we're looking for a pullback on this to get in long, 24.72 bounce, same as this. But we've just basically accumulated at the moment up here. So we are stuck. This and this will obviously form potential supports to the downside. So if you look at a bounce off of that area there, which is the previous monthly high, and then that area there, which is an old high. So somewhere in this zone would be an absolutely ideal pullback. So look at it on the hourly. So the two areas we'll be looking for, somewhere around this area here, which is a 38 retracement. So that would be the ideal pullback area down to there. But potentially we could come a little bit further down. So that's 38, that's 61.8. So somewhere in here would be a decent pullback on that to get the next leg started. So if it does come down today, or ahead of Wednesday, basically, it's unlikely we're going to get all the way down here today. But if we start getting down to here by Wednesday when the oil inventories come out, sorry, Thursday this week for oil inventories, because we just had a bank holiday, haven't we? Oh, no, sorry, no, they are back to Thursday, back to Wednesday, 3:30 Wednesday. So yes, if we can get a push back down into this sort of 80, it's kind of 82.5 to 83.5 a barrel, somewhere around there would be absolutely perfect for a pullback play. And that will see you touching the 24 moving average for a next bounce up. So oil should be long. We're looking for $95 a barrel. What's the forecast? So see where we get to. Morning, Evans. Looking at the yen strength. Yeah, so decent yen strength this morning. Obviously, we don't know whether it's going to be sustained. It's not an intervention play. It's just a little bit of strength on the yen, weakness on the US dollar, basically. It is still going at the moment. We get a lot of, you know, when you look at something like New Zealand dollar yen, for example, yeah, we get some yen strength, then it stops. Get a little bit of yen strength, then it stops. Get a little bit of yen strength, then it undoes. Yeah, so just because we've had a move down, a couple of 4-hour candles, doesn't mean this is yen strength. Could well just be a pullback. Could be the start of a move, which would be lovely. We're waiting. We've been waiting for the US dollar to weaken a little bit to give the yen an opportunity, because all the time the money is piling into the US dollar, it's not going to be piling into the yen. So you can see the previous moves we've had. Yeah. Yeah. Just because we're getting a downward movement does not mean this is the start of a yen move. It means we're having a pullback on the US dollar yen. Not necessarily. That's why I've got out of this position. We're at ADR already today. We got a gap down. So I'm not going to chance the fact that this is going to be a big run. If it is a big run, it's a big run. That's fine. But I'm not going to risk this pushing all the way back up there again. It could do. Look what happened last time. Yeah. So I got into a position here. Entry 1, entry 2, entry 3, out. But there was a good couple of moves in there to the downside, but that's all we got. So if you measure those moves, bounce off the 24 at 150 ADR today is what we've seen for the last 3 weeks. Don't know. Could go either way. If we knew which way we were going, we would do it, wouldn't we? Check the DAX. DAX is totally stuck. So that's your inside bar. We're just testing the high of that inside bar at the moment. We get a big move off the DAX today. We've had so many days like this recently where we just go dead to start the day. And then all of a sudden later on it kicks in and we get a big move. So keep an eye on it. Don't mind which way it goes. I'll get out where I'll get out. ADR is up here. So if we get a rally up to 5R on the break, I will get out up there and then short it back down to get out of the short play, assuming that we're going to come and do the gap fill. But I'll give it time to play out. It can't decide where it's going. Hennes, please say hi to my friend Morty. What am I, a radio station? Who I have introduced to your group stream. He just bought the Price Action Toolkit to capture the ORB. His first tune in today. Shout out to Morty. And this is a little number from the 1960s called... No, I'm not going to do that. Let me just see what level I need to go to the upside. One sec. 158.98. $158.96. That'll do. Just going to drag these down just in case we get a collapse. Morning, Rajiv. Right, so let's have a look at FX and the ADRs. So Aussie dollar CAD is your first ADR of the day. That's a beautiful reversal. Look, straight up into a double top from yesterday's high at ADR. Lovely. M5 reversal alert. Oof, not quite kicked in there. Look at that. What a mess. Look at this. So when that reversal alert goes, yeah, lovely short. But it is holding up at ADR at the moment. So I've got a long on this at the moment. So I'm just, don't know. That's a weird one, isn't it? That's a very weird one. So that is holding at ADR high and yesterday's high. But big, strong move from the Australian dollar this morning ahead of those unemployment figures coming out this week. So just watch this accumulation here. Somewhere around there, potentially for some resistance. So this second propulsion gap. If we get 125 ADR on this, I'll probably take this off today. I'm just going to stick my TP there. It's 0.35%. So I might just grab that. So yeah, that is an ADR reversal though. So you've got a good opportunity for a half ADR move back to the downside, potentially, if this is going to be new structure. Look at the highs going in. So we've got a high, a low, high, higher low, higher high, higher low, higher high, higher low, for a higher high. However, if this is going to double top, we should still be looking for a higher low somewhere in here, and then a leg up. So looks good. Aussie dollar CAD. So you could take that as a reversal. If you do take that one and it doesn't work out, depends if you're using a stop loss or not, but if you're trying to enter into a position, your second entry would be somewhere up there probably. Aussie dollar Swiss. Again, double top, 125 ADR. You've had the reversal alert on that one this morning. Oh, no, you haven't. You're just about to get that. Just about. Oof, look at that holding. That support rectangle is holding beautifully this morning, and it's bouncing out. So still strength coming through on this Australian dollar. But if you do get the reversal alert on that, we're looking for a play back down into these highs there, which is roughly 18, which is around about half an ADR. Half an ADR is 21 on this. So you should be able to get roughly half an ADR movement to the downside. Obviously, if it keeps pushing up into 150 ADR, etc., obviously just get in when it gets in, when it goes short. Aussie dollar, US dollar. So just taking that long off. We just had the reversal alert on that. It is just trying again. So stuck, this Aussie at the minute. It is holding its ground, though. Bear in mind, obviously, we're out of the Asian sessions. The Australian dollar is not being manipulated anymore. The US dollar is, the pound is, the Swiss franc is, everything else is. So it's holding its ground at the moment. We've got very strong Aussie this morning. Didn't see any other Aussie news. I haven't missed anything, have I? I had Biden talking this morning about stuff. Nothing else out the Aussie today. So potential reversal on this one. If it pushes up and makes a new high, obviously you're going to get a new support rectangle form and a higher reversal alert go in. So personally, though, I would much rather see that rally. Swiss yen. So all these yens, we've got 3 yen hits: the Swiss yen, the euro yen, and the US dollar yen. So we got gap downs. The Forex market very rarely gaps. It's not something we get anymore. It doesn't very often happen. So it's difficult to know how to deal with a gap. Typically, we will say, obviously, gaps get filled. So today, to get this Swiss yen filled, we've got an ADR hit to the downside, and we're going to need a 150 ADR reaction in the opposite way to get the gap filled. So it's highly unlikely that's going to get hit today. So yeah, difficult to tell what's going to happen with these yens. So you have got a reversal alert forming down there. It hasn't triggered yet. So you're just about to get it potentially in the next 5 or 10 minutes, unless obviously we get some more yen strength coming through. But obviously your target to the upside is very straightforward. We go for the gap fill. So target maybe those lows or the gap or the lows before it. Somewhere around there is a pretty safe TP, although that would be where we would expect to get to 150 ADR. Probably not going to hit it today, though. So yeah, push up on the Swiss yen, potentially. But watch these yens. We don't know whether this is the start of a move. So it's a tricky one. Euro odd hit to the downside. Australian dollar flying at the moment, still pushing harder. Euro, if they freeze those rates on Thursday, if this euro rate does come out at 4.25, I think the market's going to have a negative reaction. So this euro Aussie could continue to drop. So if you're getting into ADR reversals on this and you're thinking, well, if it doesn't work out, I'm going to just start a position on it, just be aware we've got 2 news elements coming this week for the Australian dollar and the euro. We've got the unemployment for the Australians and we've got the rates for the euro. So this could continue to the downside. So key is going to be this previous week's low. We're at 100 ADR. If we get the bounce off of that, you're going to get the reversal alert. So it's an ADR support, propulsion, bounce, almost, and it's also RSI extension on the hourly at the 30 level. So there's a hell of a lot of confluence for an ADR reversal trade on this. However, I probably wouldn't get too greedy on it, just in case this is going to continue market structure in the way that we've got going at the moment. Yeah, that's what we should expect. So we'll see, but that's a good ADR reversal, but wait, obviously, for the support, wait for the reversal alert to kick in. You haven't had it yet. Euro, yen, same as the Swiss yen. So euro yen and Swiss yen, probably just take one of these, not both. It's pretty much the same trade. The Swiss franc moves with the euro. Same thing. Yeah, we've got a gap fill in play from the Swiss and the euro. So one of those two. No reverse alert on this one, just come off of ADR. So the Swiss, you're at ADR, no reverse alert. So it's the same trade, don't take both. New Zealand dollar Swiss. Big move to the upside. Reverse alert on that one has already kicked in. Right at the highs there. So that was your reversal candle there. And that plays underway. New Zealand dollar Swiss. But again, if this Aussie dollar is going to continue on its rampage, the New Zealand dollar will get dragged along with it. If the euro is going to continue to drop like it looks like it is at the moment, the Swiss franc is going to get dragged with that. So this looks like it might be a fairly decent long today, but we'll see. But that is an ADR reversal. You've got a fair bit of distance up until resistance, which is above 125 ADR. So that would be the ideal reversal alert to take when we get to 125 ADR and a pullback on the move. But look at the market structure on this. It's absolutely beautiful. Textbook. Yeah, it doesn't get any clearer than that from market structure. Look. Up into that double top. And US dollar yen, as we know. So big gap down. Just exited my short. Basically, we hit propulsion, rejected. We tried again, rejected. We're at 125 ADR. So I got out of it basically because it looked like it might pop. And we've got a reason for it to pop as well to get that gap done. But there is still sustained strength on this yen or weakness on this US dollar at the moment. But we are just putting in at the minute an inside bar. So market has had a rejection. We've tried to put in a new low and failed. We've tried to put in a new high and failed. So that's an outside bar. And now we're putting in an inside bar. So this is basically the market screeching to a halt. Indecision, indecision. So we are starting to accumulate down here, which means we're going one way or the other. So we'll see what happens on that one. But your reversal alert on that, on the 5 minute, is going to be here. So you have already had one this morning on this there. So this candle here, when that low was put in, that would have given you a reversal alert entry long there. So it's obviously pushed down, invalidated that low. So that's your second reversal alert entry, which is actually going to be worse than the first one. So you're better off if you took the first one anyway, if it's going to go, obviously. So we'll see. But difficult to tell what's happening with these yens today. This US dollar is so unbelievably exhausted. We've had such a long, sustained run on it throughout August. It's due a big profit take, isn't it? So they are due to scale out some of this US dollar. Whether it goes into the yen or not, we'll wait to see. It looks like it is at the moment, obviously. So this might be a tricky mean reversion play. It will get back up to there at some point, but it's possibly going to want to drop for a bit first. So we'll see. But there's your ADRs. RSIs, there's quite a few to look at. They're only just extended on the 30s. So there's no 75s at the moment, hence no new positions being taken at present. But we will see what happens with these. So we'll have a look at all of those. Let's just have a quick look at what the DAX is doing. So DAX is rallying to the upside. So we're filling this propulsion gap at the moment. That high has been invalidated, which is that previous support level. So, I mean, there's not a lot really until you get to 125 ADR today, which is obviously this previous high from last week, which is Monday's high basically, 125 ADR. So at some point we are going to stall out. Very difficult to tell. It could be any point here we could stall out. Absolutely anywhere. So we'll see what happens. Just got to go with price action on this one. So my play at the moment is 5R. So basically when I get hedged, I move basically up to 5R. Which is just shy of ADR today, and that is your weekly high. So we'll see what happens when we get to there, and I'll be watching for price action to maybe scale into a second position short just to get out of these shorts today. I'm also double exposed today. I wouldn't normally be in 2K drawdown on this because I got 2 positions on because I'm testing a new part of the EA, which hasn't worked as usual. Nothing like testing on real money, eh? But end of the world, it's only a hedge. Thought feeder, who took the 5-minute ORB on the DAX today? Not me, but if you did, well done. So that was your 5-minute ORB today. Well, I'll show you the 5-minute ORB on the chart that's got the 5-minute ORB on, which is that one. Okay. So that one there, the opening range high 2, that's your 5-minute ORB. So nice clean break to the upside today. You're roughly 1R, just shy of 1R at the minute. Now you're 1R, definitely. So the 5-minute today was the one to take. There you go, just approaching 1R now. So watch, if you are long on the 1-minute, on the 5-minute ORB, watch this high. This is that weekly high. Sorry, this level here, which is the other previous weekly level. It is a propulsion gap. So there is potential we might find some sellers kicking in there. But other than that, it's ADR. So if you're long on this, you should be able to get 2R out of this today. So hold it until 2R. But there's 1.5R there, very close. So good little trade this morning with the ORB. See where we go though. AJ, I missed what you were saying about the quid thingy. Why is it so weak? Figured the euro was way worse. I don't know. What did I say about the quid thingy? Pound is weak at the minute. We've had negative news on the pound. We had bad CPI figures. The market's basically just not. I think the problem with the pound at the moment is that Bailey has been very, very quiet. We had some negative CPI, which the market basically dropped on. Bailey has been very, very quiet. We were expecting a 0.5 to 0.75 interest rate increase on the pound. But what we seem to be talking about now is potentially a 0.25 to a 0.5. So that's off the table. That makes it slightly more bearish because anybody that has factored in a 0.75 increase will want to readjust their positions and scale out, which means obviously weakness in the pound. So I think that's partly why we're having a bit of a weakness on the pound at the moment. The euro also, this interest rate rise on the euro is not good. Yeah, so we got the 4. We forecast the 4.25. So this is the first freeze on the euro rates. Yeah, and they're talking about potentially one more, just one more though. And they may well do it on Thursday. So we might get a 4.5. If we do, then I think we'll get a little pop in the euro, but I don't think it'll be sustained because this is not enough to get on top of inflation at the moment. Yeah, 4.25. If you look at where we are with inflation on the euro, it's too high to be freezing rates yet. You are way behind. We're on 5.3 with static inflation change, i.e. inflation's been coming down and now it's not coming down anymore. What usually happens after it's not coming down anymore is it goes up. And if you freeze those interest rates and that thing then decides to tick up, you are now again on the back foot, which is the problem. The euro and the pound have both been on the back foot from the day one when this inflation started to rise. So these guys are behind the curve, hence 5.3 and 6.8. So freezing rates is not the thing you want to be doing. Look at what happened when the Australians did it. Look at what we are at still with Australia, 6%. And look at what's been happening to the Australian dollar over the last few months because they haven't put their interest rates up high enough. I think this is a critical error by Lagarde, but hey, I don't run the bank. So I think they're all going to be weak, euro and the pound. Hence the US dollars having a decent run at the moment. Where do you want to put your money? if you're not going to put it in the euro and the pound, where are the other places you want to put it? The Swiss franc, the yen, and the US dollar. The moment the yen's moaning, the Swiss franc's part of the euro, going to the US dollar. That's going to change though. So, but we'll see. Very difficult to tell. We're in such a difficult situation with everything at the minute. Inflation is driving everything. So it's tricky. Morning, Alan. Have you done US dollar CAD analysis? I haven't. It's an RSI. We will do. I'll do it in reverse order, especially for you today, starting with the US dollar yen. How do you choose your TP on the ORB if just leaving the EA to run? So on the ORB EA, so you talked about the new version that I'm building, the hedging strategy. That basically is 5R. Yeah. So I have targets set at 2R and 5R. If we hit the 2R target, we break even, and then we see if we can get a run to 5R. Yeah. The reason that is 5R is because it's lower than ADR, so we can know we can achieve it. And it's a very decent profit. Obviously, it gives me a 7R trade on the day. Yeah. So that's the reasoning behind it. It's literally, it's nothing specifically logical in there. It's 5 times the opening range, and the opening range is always a minimum of 10 or maximum of 20. 5 times 20 is 100, which is ADR. So basically, the logic is, if we get an ADR day, I'm going to hit it. If we don't get an ADR day, and that range is lower than 20% of the average daily range, which is the maximum I set, we're still going to hit it. So it's just logical that we can hit that target. It's all about trading. It's all about picking targets you can reach. Yeah. If you're going to have a risk-reward ratio on a trade, there's no point in having a 3-to-1 risk-reward ratio if that 3 and 1 means that it's got to move 6 ADR to get somewhere. Yeah. So if you get into a trade and say, I'm going to put my stop down there, and you want a 3R on it, it's not going to hit it. So you've got to have targets which are achievable. I also have screenshot every DAX opening range for the last 18 months and gone through them one by one, flicking through every single one of them, looking at how far we reach. And I've done back tests with this version of the EA as well, using all of these R ratios, basically, to see how often we get to them. The difference between reaching 4 and 5 is very little. And the profit between 4 and 5 is huge because it's a load more money, obviously. So it either, quite often it will get to 4R and return, but it's not getting there. It's not turning there because it's got to 4R. It's just because it's exhausted by the time it gets there and it pulls back. The question is whether it pulls back and drops or whether it pulls back and puts a second leg in. If it's going to do that, it's going to hit 5R anyway because it's on its way to ADR. So it's a rotation day or a trend day. If we're going to get a trend day, go for as much as you can. That's just the logic. But I've back tested all of this to back up my theories, and it just makes sense to go for 5R. However, what I will do, as you will see me do every day, is if there is a resistance that I see, so let's say, for example, that high, this price action didn't exist, and that was the high there. Yeah. If I saw a high, I would move my TP down because price bounces at support resistance. So if there's a logical resistance on the chart, I will move the TP manually. You could code in all sorts of things to try and get the EA to do this for you, but at the end of the day, there's too many combinations to test. So that's all it is. Nothing clever. I have no idea where it's going, obviously. It's just, I want as much money as I possibly can out of it. AJ, lost connection. What I meant was the pound is acting weird. Yeah. Seems more than interest rates. Don't know. Did you see how all the banks globally have lost $1.5 trillion in deposits this year? Things getting wiggy. Yeah. There's all sorts of things that drive the markets. There's no point in worrying about it because we can't do anything about it. Yeah. So, you know, people try to, I think with trading, specifically with FX trading, you can try and analyze things too much. At the end of the day, this thing will go up and down, regardless of whether there's a bullish or a bearish bias on something, because it has to go up and down to get to where it wants to go. You can't just go one way. You have to pull back. So whether or not something flips bullish or bearish, you're always going to have an opportunity to get in and out of something. So yeah, if things are getting a bit wobbly on stuff, fine, they're going to move differently. But on the way to moving differently, they're going to go up and down. You can't forecast a time when something's going to happen. So therefore, just get in and get out when it does what it does. Some you will win quickly, some you will win slowly. As long as you're winning, that's all that matters. Have I taken another challenge yet? No. I'm not trading prop at the moment. I'm trading my own funds. Just because of what's happened with my Forex funds partly, and they owe me money. I'm just waiting for this thing to settle down a little bit in my Forex funds. I want to see what the CFTC's outcome is of this, because if my Forex funds are the first to topple, they're all going to topple. So I'm not going to bother with any at the moment. I'm fortunate enough that I've got enough money that I can trade my own capital. I've obviously made decent money out of prop, but I don't see any point in chucking a few grand into challenges at the moment. Any second, it could all vanish. And because you are not trading with a regulated broker, I don't fully understand what the legal comeback is. So, for example, if you take 3 evaluations with E8 on E8, have the same thing, right? And they go pop. If that was a broker, you are covered by the regulators. They're not regulated, are they? So where's that money gone? The money that that my Forex funds owes me now, right? It owes me 2 lots of money. It owes me some money in the account, and it owes me some affiliate revenue. Am I going to see any of it? Don't know. So I'm not going to chuck anything into prop until tomorrow, which is when we get the first outcome of the CFTC investigation. And then I will decide what I'm going to do. But there's a lot of people saying, oh, you need to go with the UK one because the CFTC can't touch them. We have got regulators in the UK as well, you know. So if it's not going to be a case of, oh, don't worry, they're in the UK, they won't be in trouble. They will be in trouble. If they're operating in the same way and there is something that they do not like, the UK regulators and all other regulators around the world in the Forex industry are going to do the same thing, or in the finance industry. So just not bothering at the moment. Heard anything bad about E8? No. I've not heard anything bad about any of them. I hadn't heard anything bad about my Forex funds until I tried to log into my account and I couldn't. Yeah. I hadn't heard nothing wrong about Alpari until the Swiss franc cap was removed and Alpari went bust. Biggest broker in the world. I was with them. They went bust. Nobody's safe in this industry. You have to understand this is a multi-trillion-dollar a day industry. And there's one regulator holding the keys to everything. They can stop the markets, they can start the markets, they can stop traders, they can do what the hell they like. All these regulators can do what they want at any point in time. So whenever you put your money anywhere, never safe. Don't care what kind of backup you've got. With Alpari, it took me 3 months to get my money back out of Alpari. And that was with a regulated broker. So this is the thing with my Forex funds. If there's no regulatory protection, you've got to go solicitor route. So there's going to be a case action put against my Forex funds by all the traders individually through a solicitor. You could be sitting here in 3 years still fighting. So there's no way I'm sticking any more money into prop at the moment until I know what's going on. CFTC might turn around and go, you're running a shady. We know prop firms are shady. Yeah. Come on, you're buying a demo account. You know you're buying a demo account. You're paying $500 for a demo account. We know that, right? We're not stupid. But if it's okay for them to sell demo accounts, and the only problem was they didn't tick a box to get a regulated broker and it has to be part of a third-party shareholding rather than an individual, CFTC will go, you've sorted that, thank you very much. They'll be back in business tomorrow. We don't know what the outcome is going to be, do we? There's no point in speculating about it. Just wait for the outcome. Yeah, there's lots of people saying, oh, they're doomed. This is all going to blow up. It's like, yeah, it's like saying this is going to go up or down. You've got no clue. No one's got any clue. Just wait and Wait for the dust to settle, and then we'll see what happens. XR update.news, late but made it. Well done. Morning day trader FX. So yeah, we'll just watch this DAX. At the moment, it's looks like it's continuing long, so I shall stay in. Right, RSIs. So US dollar yen, we'll start at the bottom because somebody wants to look at US dollar Swiss. So we are getting more rejection at 125 ADR. So we are extended now down to 30 on the RSI. So we are potentially in pullback zone. So this is a good potential long opportunity from here. So this is the propulsion gap of the news. We came back, we tested, and we went. This is the first retest of this area where they started buying the US dollar against the yen. This could well be the bounce point to come back up and do this gap and stay in this wide range. So all they've done is widen the range. Yeah, potentially. So we'll see what happens, but there's a potential good long opportunity there. However, if this does push back above that 147 level, the Japanese are going to intervene and drive it all the way back down, way lower than that low. If you're going to long it, I would say do it with a stop and use it as an ADR reversal trade. Look for a third to a half an ADR move only. If you're feeling brave, try and get the gap fill. But I wouldn't want to turn this into a position in case the intervention comes. Just look at what happened last time we got the intervention. Yeah, you do not want to be on the back end of a Japanese intervention. Yeah. Look at where we are here. It's a lower high. You're going to put a lower low in. Yeah, if you're going to try and position trade this from here, you're going to be bankrupt by the time you get out. Yeah, so just be careful trying to go long anything yen. If you want to try it, it could well just come and double bottom and bounce from here and go into this range. We don't know. We've no idea what's going to happen, but we do know every time we start pushing, the Japanese moan about it and they will not stand it. They will kick in. They're the only country out there that intervenes, and they will do it. So just be careful on that one. US dollar CAD is your other RSI extension. I'm short on this one already. So this has just got extended. I'm not convinced this US dollar is going to be able to continue this rally. It needs to have a bit of a recovery. So hopefully this is the start of a move to the downside. So if it is going to come down, it will probably come down faster and harder. So I would wait really until you get a bigger extension on this. If you look at the downside extensions on the RSI, we haven't had one since all the way back here, which is when we started that long. Yeah, so all these previous ones worked out absolutely lovely. So I would wait for it to get a little bit deeper and assume that we're going to come down in an orderly fashion. But whether or not we come down and put a new leg in, or whether this is the start of the weakness that we've been expecting in this US dollar, we don't know. But certainly looks weak at the moment. So just be a little careful with it. But yeah, it is extended to the downside. But I'm short at the moment. My average is just on beyond ADR. So if we can break this propulsion gap and break last week's low, not necessarily today, but at some point this week, I think we've easily got a run all the way down into there. I've got a target in this propulsion. In fact, what I'm going to do is I'm probably going to move this target down now. So that's my profit basically at the moment on the position. It could obviously go a lot lower. So I've got targets at the moment set all the way back down on this propulsion gap. So that's my target down there. But that is kind of 3 to 4 ADR away. So we've got the CPI figures coming this week on the US dollar on Wednesday. If those CPI figures come out as negative, this thing is coming down like a house of cards. If it comes down as an expected or potentially bigger, i.e. higher number than expected, I think we'll probably just stay range bound. Or we may have a little bit more of a grind upwards. But I get the feeling we're going to see CPI dropping again. So where we are at the moment, we're on 3.2. It went up last time. Yeah. So anything negative is going to drop that US dollar. Yeah. The target is 2. We are the highest interest rates at the moment in the world, obviously of the major minor FX pairs. It's the closest to target of all of them. Forget the Swiss and forget the yen. Don't include them because they don't do things the same way. But it's the closest to the 2%. So if this now comes out as a negative, they are going to drop that. If they drop that, the US dollar becomes less attractive. We're going to get the drop start. So we've been pumping. We're starting now to flatten out on interest rates. As soon as they not even do it, hint at the fact that we are going to drop, bang, we're going to get that move. So it's just a case of waiting. And, you know, as you can see here, this is 3 weeks ago. In the last 3 weeks, we've only done that. But if you look at the last 8 weeks, the last couple of months, we've obviously been rallying hard. But you look at the slowdown in the last 3 weeks on this. Big, strong rally. That's what we've managed. And that's what we managed in the previous. So 50% of the move of the previous month. Yeah, so we are slowing and rounding. So it is starting to come down. We're just waiting for a reversal alert to hold. We've had that. We've had it retested. So market structure has definitely shifted on this US dollar CAD. You've got your high, your low, your lower high, lower low, lower high, lower low, looking for a push up and drop and continuation back down into these lows. Well, then we'll test these lows. So this is the previous high, support, support, support. That's going to be the key area. If we can bounce and crack that, we're off. So we'll see. But if you're going to long it, just be prepared, obviously, to scale in. You'll still be able to get out of it as long as it's orderly. But if we have a really big drop on that CPI, then this thing could be putting in 200 ADR days for a couple of days. So we'll see. But that's Wednesday. So we haven't got to worry about that until Wednesday. Just quickly see what the DAX is doing. Not a lot. Pound odd. So that's just started to bounce. Your 5-minute reverse alert has just gone in on that one. So that is an H1 RSI extension below the 30 level. You just had a reversal alert. We've got this lovely support area here. So we tapped down into this area. We bounced out of it again. There. We came down. We bounced again. Came down. Bounced. Bounce. 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 Broke. So we've broken support. So the question is, are they running all this liquidity and going to stay range bound, or is this the start of a new down leg? If that is the case, you don't really want to be long in it. But it's been highly supportive, this level, for a good sort of 3 weeks now. And that's the first breakdown we've had. The trouble is with the pound, because the pound obviously has been rallying quite hard up until we've had the negative CPI, and just not quite going as well for the pound now. And the Australian dollar obviously could well rally now after its weak run. So we've got loads of areas coming up which are potentially going to act as support levels. So it's very hard to pick an area here for a definitive bounce. So I think this will probably come down like that. So if you do long it, I don't think you'll have a problem getting out of it, because it's going to come down as orderly as it went up, I think. So it's just a case of scaling in. But it's not quite extended enough for me yet. But it is extended. You've had the 5-minute reversal alert. It'd be nicer if it got to ADR today. That would give us a nice extension, and that's where I'll probably take first entry long. So that's pound odd. We got euro odd, pretty much the same trade. Yeah, same thing. It's that support area. We haven't broken it yet on the pound odd. On the euro odd. We've got obvious range high. This is forming potentially a range low at ADR. We've just had a reversal alert short on the hourly, so we have just broken structure, although it's just off of that big news spike. So again, same with this one. Somewhere in there, you're going to find support. There's a propulsion gap there to the downside, which is kind of 275 ADR away or something. So if you're going to long it, it would just be a case of scaling in down to there potentially. But we have got the euro rate coming up on Thursday. So anything you get into today or this week on the euro, you're in the lap of the gods on Thursday when that rate comes out. We've got 2 opportunities for this to go short with the euro and 1 opportunity for it to go long. Yeah. So if this rate comes out as expected at 4.25, or it comes out it won't come out at 4. It's not going to go down. So literally it's either 4.25 or 4.5. 4.5 will probably rally the euro. 4.25 probably won't rally the euro. However, the 4.5, I'm not even sure that is going to be enough, because they've said if they do increase the interest rates one more time, it's only going to be one more time. That's bearish. Yeah, so it's kind of, you've got a bearish outcome, although there might be a bit of a spike before it drops. So I don't know. The euro doesn't seem like it's got much going for it at the moment. Aussie's had a bit of a weak time, and if the unemployment figures come out decent for the Aussie on Thursday morning, the unemployment rate comes out at 3.6, for example, as we just had with the US, we'll get a rally in the Aussie, which means euro will come down against the Australian dollar. So good double bottom bounce, though, potentially on that one. Aussie dollar, US dollar, again, extended to the upside. So that's just extended. I've just got out of that one, Aussie US this morning in the propulsion gap. Nice extension, middle of the range. So short, if that doesn't work, be scaling in and then get out off of one of those levels. So fairly straightforward. Not extended enough for me yet. I want it longer, same as that one there. So it's that trade I'm looking for, but in the opposite direction. And we've got the Aussie dollar Swiss. Beautiful ADR. Beautiful ADR and beautiful resistance potentially coming up. You still haven't had it. Look, still haven't had the reversal alert. Can't believe that hasn't triggered yet. Looks a lovely short at the moment. Back down into previous day's high and yesterday's high, which is here. So short it down into there and get out as a scalp. But it is extended on the hourly. So no reason why this shouldn't come down. You've got nice resistance coming up as well. So if that, we haven't tapped into that yet. But if that doesn't hold up at 225 ADR, you've got this monthly low, which we have tested twice. And then we came back and retested it. So we know that there's a good resistance level there as well. Again, pull back on a down leg, potentially. So there's your RSIs. Not a lot at the moment. Dallas, thoughts on Euro odd? I've done that one. Okay, DAX is running out the propulsion gap. We are holding. Very slow today. So that initial move obviously took a while to kick in, but we've not really gone anywhere since then. We're now contracting again. Look, inside bar. So very slow market today. So watching this propulsion gap, basically, an ADR for upside, and then we'll probably get a pullback from there. But just worried about this just coming straight back down for this. Difficult one today. Anybody got any other pairs they want to have a look at? Kind of covered all the main setups today. No other pairs to look at? No? Okay. So we're starting to rally again. So new hourly candles in. So looking to break that high. So we've got 2 inside bars on that high. So if we can break that high, we'll retest that high there. And then probably, by the looks of things at the moment, do another leg. So it's just a case of where we're going to stop is what we've got to decide today. Nobody got anything else I want to look at? No. Okay, cool. Right. So I'm back this afternoon. I'm just going to manage this position on the DAX. I'll post in Telegram what I'm doing with it. But at the minute, undecided. Just wish I hadn't have doubled up on this trade today, which is a bit annoying because I don't mind taking a hedge loss, but taking a double hedge loss kind of hurts a little bit more. What was I going to say? Oh yeah, Friday. Did I cover the hedge on Friday? So the DAX on Friday, I think I posted it in Telegram. Did I? Maybe I didn't. No. Okay, so Friday's was a bit of a mess, wasn't it? So got hedged at the open. Seems to be the course of action at the moment on the DAX. Basically, I got out of the shorts because it looked like we were doing a gap fill, basically, and we bounced off a support. So I exited those shorts looking for a break long. We didn't get it. We absolutely collapsed. So I had to basically try and get in. So that was the previous day's low, which I tried an entry off of with a stop on it. Got out. Then we pushed back down, put in an inside bar, broke that inside bar. So I entered long again. And then we pushed back down, up, entered again, and I exited the whole lot there. So closed out in a bit of profit. I can't remember what the profit was. Wasn't a lot. It's loads of positions. I did post it. I'm sure I posted it. Or did I post it to somebody? Oh, yeah. I posted it to somebody. That's why. So that was what I did. So I did 2.86 on... that's the... Well, that was Friday anyway. So I cleared 2.86, got out the DOW, etc. as well. I'm sure I posted it to somebody. Oh, that was it. There you go. So I made... but yeah, it was a win, basically, on DAX. So hedging is working very, 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 very well. But obviously I'm manually trading, so it's not fully automated. Just the entries and the mundane stuff like moving your break evens, setting your targets, moving your targets, all that sort of stuff. That's all being automated fully by this new EA. But I'm obviously still having to make the decisions on the hedges. So the beauty of this is if you get the clean break, you just make money. If you don't get the clean break, you're just buying yourself time to think about what the hell you're going to do next and see what happens in the market. So you're just buying yourself, you're freezing time to give yourself that opportunity to go, right, where the hell is this thing going today? And if this thing does this and it ends up there, that is what you take. You take a loss. Just like any other trade. If that had stopped out, I'd have taken a loss. What I've done is I haven't taken a loss. What I've done is I've frozen my drawdown to think about what to do next. So if you have to take that loss, you have to take that loss, but it gives you that opportunity to dig yourself out. And this is why I'm really liking this hedging strategy, because if you see a definite support resistance bounce, it just is so easy to exit, because when you get those resistance bounces or those support bounces, they tend to be quite quick reactions. You get a big fast move, 15 minutes or so, it will just bounce as everybody piles into the trade. That gives you the exit on the opposite position, allowing you to basically bank a profit on the day very, very easily. The only days it really goes terribly wrong is when you get it wrong, which is why I've not got out of that long. I had a theory or thought that I maybe could get out the long there. If I had have, I could get out here now with a break even on the day, but I haven't. So it's just buying yourself the time, which is lovely. So potentially today, what I'll be watching now is if this is going to go short, I'm not going to exit this long, because what this could be is a pullback and push. It could also be a drop down to there. So if we get down to that propulsion gap and that gap fill, and I see price action doing that, I will probably exit these shorts and then wait for it to push up into here, because what we're getting, a rotation day. Hard to make money in rotation days with a breakout strategy, isn't it? So that's the plan. That's what I'm going to do with this one today. Try that. Or, as you know, that 5R to the upside. We'll see what happens, but I'll post it in the Telegram. What's the best way for me to plot liquidity? ATR, I guess. Stick an ATR on your chart. That shows you how much the candlesticks are moving. And obviously, that's liquidity. That's what you mean. I'm not quite sure what you mean. Are you talking about... oh, well, right, okay. So I think you're talking about the stop run theory thing, aren't you? So basically, all it is support resistance, yeah? Liquidity zones, supply and demand, support resistance are the same thing, yeah? What people do is they rename stuff to sell you stuff, right? Support and resistance, horizontal lines on the chart, have been around forever. I have traded them for 15 years. Someone comes along and goes, there's a thing called a stop run and there's liquidity zones. What you mean is there's support and resistance areas that the market bounces around. It's the same thing. Then someone comes and goes, tell you what, if we draw a box on the candle that made the low, we'll call that a supply area. It's a support and resistance area. But let's call it supply, because then I can sell you something to do with it. ICT sells you something because it's a liquidity zone. It's a new theory. Supply and demand traders sell you supply and demand indicators and supply and demand courses. It's a support area. I've got a line on my chart. It's a support area. Call it what you like. Wherever price has turned, you will find support, liquidity, and supply. What you need to understand is, if you want to plot it on your chart, that's fine. But understand, when it gets there, the odds of it going up and down are 50%. Having something drawn on your chart does not give you any advantage over whether or not the price is going to go in a different direction. It gives you the same odds right here of bouncing as it had there. There was no line drawn there and it bounced. Why? I don't know. But the odds of that candle were 50%, and the odds of that candle here when we get there is 50%. How you plot it is entirely up to you. Just understand that obviously if you use a stop loss, you're just going to get stopped out on it, and it doesn't matter how you draw it on the chart or how you find it. I've got software for futures called Jigsaw or Bootcamp, and those pieces of software actually show you the orders in the market. Still doesn't make any difference. When it gets to this, when you look at Bootcamp or Jigsaw and you see a big block there, these are actual orders placed by actual banks in the market, drawn as a heat map. I can see them, and I can see them pull the orders away and put them in. I can see it unfolding real time. I can see where the bank's orders are. When the market gets there, the odds are the same, because when the market gets there, we know there's a load of bank orders there. Are there more bank orders going long at this level, or are there not as many bank orders going long? That doesn't help you knowing that the orders are there, because when it gets there, there's still one thing that needs to happen. Either there needs to be more sellers than buyers or more buyers than sellers. That will either break through it or it will bounce off of it. Doesn't help you in any way. That makes sense? Your odds are 50-50. Every single time this thing paints a candlestick right now, this could go up or it could go down. Because it's been going down, doesn't mean it's not going to go down again. That's got nothing to do with what's going to happen in the next candle. Whether there's a line there or not has got nothing to do with what's going to happen in the next candle. You can get clues at areas, and that's why I use support resistance, because we know it bounces. So it gives you a focus to look for price action. A price action candlestick happening in the middle of a push up means nothing. A price action candlestick happening in the middle of a push up at an area that price has previously rejected makes that important. Yeah, go and look at your charts and look at hammers and shooting stars. Yeah. Didn't do anything. Didn't do anything. Why didn't it do anything? Because it's not a level. Yeah. When you see one forming at a level, it's a completely different thing. I'm just trying to find one. Probably won't find one on the DAX actually, because it doesn't quite work in that way. But there you go. So this one here, yeah. So we hit this level, big wick, yeah, big wick, big wick, big wick. Why are those big wicks happening there? And why should you pay attention to those big wicks and not pay attention to that big wick or that big wick? Yeah, because there is a previous resistance. If I could find it. That's why those wicks are important, because there's sellers here. So that's why you have support resistance on your chart, because you're looking at price action at support resistance. It's called PASR, price action support resistance. Very important concept, been around for a long time. But people now call it liquidity. They call it supply and demand. They call it all sorts of stuff. But the same thing, it's a line on the chart. Hopefully that answers the question, Hennes. But been doing some research. When we open a contract for difference, is the contract with the broker? Yes. If so, isn't there always a conflict of interest? Yes. Welcome to trading. You've signed a contract with somebody to say, execute an order at whatever price you fancy, take some commission from me, take some spread from me. Oh, and by the way, here's all my money, and here's an order where I'd like you to stop me out with a loss, please. Off you go, Mr. Broker. That's basically what you've signed a contract to do. Massive conflict of interest. But if you want to trade, you don't have any other choice. The only way you don't get a conflict of interest is if you're trading in the futures market. Because price is not specified by the broker, it's specified by the Chicago Mercantile Exchange. So there is no woolliness. The only thing the broker can do you on is speed of execution. But that's why they don't do that, because they take they become books basically, and they take a preferential fill on orders. They make their money out of every fill. Their job is to basically get you to press the button as much as possible. Pound yen looks like a move up. It will be a move up until the yen intervenes, and then it'll be moved down. So what if you're currently testing just a set file of the ORB EA, or is it a separate EA you're looking at to release? This is a separate EA basically. It's a similar concept, but I built it basically to do analysis and research. So what this does is it's been used to test lots of different scenarios at the open and give me data. So it exports a huge data file. It exports screenshots of every break so that I can visually test everything. I wanted to test the ranges based on ADR. I wanted to test percentage movements based on ADR. I wanted to do a load of ADR testing, basically. And the other version didn't do it. So I built this to basically do a load of testing. And I accidentally made it hedge. And as soon as it hedged, I realized that if the movement on ADR on a hedge, if I can work out what the movement on ADR is on a hedge, there's a high probability you can eliminate a lot of the losses in the opening range breakout strategy. So it's kind of evolved into what was going to be a research project into a completely new strategy, which I'm forward testing as well as back testing. So it's a completely different thing, but still based on the open. So it's kind of based on the opening range, but with more rules. But I'm not going to release it until it's ready to be released. It needs more testing. Morning, Astro. I've been using Williams percent think it's useful for following a trend. Yeah, try it. Thanks for subscribing, Mike. Didn't see you subscribe there. Welcome aboard. So then, just like a prop firm, those who are profitable are just business costs to the broker. Yeah. So basically, brokers work into when you're with a broker, you are either on their A book or their B book. So brokers have their customers split into two segments. 90% of customers lose 90% of their balance within 90 days. Yeah. So these customers will be put onto one of the books. Yeah. So when you deposit $1,000 in your broker, they are 90% sure that you will lose $900 of that. So what they will do is every time you place a trade, they take the opposite side of your trade. Because if you're going to lose 90% of that, they may as well take a spread, a commission, a swap, and the 90% of your money. So it makes sense that when you press the buy button, they know full well that you're going to lose most of the time. So they press the sell button. And all they do is they use their liquidity to fill your order. So you never actually get your order farmed out. They look at customers on a regular basis, and they've got software that does analysis on them to forecast when they will lose their money, on what date, and how much of it they will lose. And it's why. Yeah. So if you regularly get in and you only trade gold on the 5-minute chart and you place your stop losses 10 pips away and they are losing money constantly, they know that if you continue to use that strategy, within a period of time, the money will disappear. Yeah. So they can forecast when you're going to lose your money. They know when you're going to lose your money. They can seal your orders as well, so they can spread you to swap to stop you out. You've signed a contract to allow them to do all of this. If you become profitable over a period of time, they will lose money, because if you put 1,000 in and you make that 1,000 1,500, they've lost 500 because they took the other side of your trade. So when their P&L on you as a customer goes negative, you get swapped over to the B book. And what they then do is they farm your orders out to the dark pools and get your orders filled by third-party liquidity providers. And you still get executed pretty much the same, but the broker now makes a swap, a commission, and a spread on you. So this is how they make their money on you, using these three tools. They do not take the other side of your trade. That's the better way for them, because they make a hell of a lot more money. But the downside to that is, if 90% of their customers lose 90% of their money in 90 days, what have you got to do as a broker? Replace these customers, because these customers have just all gone bust. So you've got to find new customers, which is why you see adverts everywhere for brokers, because they have to replace 90% of their customer base every quarter. So people like me sit on this book where they just make small amounts of money out of us. That's how brokers work. Yeah. So there's a conflict of interest constantly with a broker. You are either, they are trading against you and it's in their interest for you to lose, right? Or they are trading for you and they don't care what price you get executed at, because they're only going to make a swap, a commission, and a spread on you. So they will execute your order with whichever liquidity provider provides the price that they can get filled on the easiest. And that's why sometimes when you become a B book, you get freezes in your platform, you get wider spreads happening, and you get suddenly filled at different prices than you requested, slippage, because you are not of any interest to them anymore, because they can't make much money out of you. So what tends to happen is when you become a B book customer, as I have done many times, you swap brokers regularly, because the trading conditions get so bad because they can't be asked with you anymore. You have to swap, which is why I've moved from X to Y to Z. I just had a disconnection. It's not ticking. I can't even see. There we go. Right, that was only a short disconnection. So I'm just trying to find out which account and why it's disconnecting. Yeah, so that's how brokers work, basically. So you're never going to be in the good books. So you just swap, basically. When the trading conditions get so bad, this is why I moved away from Axie. I was just getting to the point with Axie where the disconnections were so bad, and it wasn't so bad, it was just happening regularly. And the spreads weren't just weren't very good. So I moved. Your broker just switched the book for you. Yeah, exactly. Just switched me back. There's nothing you can do. It's just, if you want to access the financial markets without becoming regulated and spending thousands of pounds on becoming a regulated trader, professional trader, you have to use retail brokerage. But these retail brokerages take time to clock on to who's winning and losing. They're making so much money out of the people losing that they don't spot the people winning unless you make decent inroads into it. And it's usually pretty quick. With Axie, it took them 6 weeks to identify that I should become a B-Book customer, and they moved me. They sent me an email saying, hi, we've noticed you're putting a large volume through the markets, therefore we're going to make you a professional customer. We're going to need to move you over onto this type of account. So I had all my funds moved over to a different type of account. Nothing to do with anything what they said in the email. It's because they lost money on me, basically. They needed to move me over to the servers that farm out to dark pools. But they word it in such a way as you are a professional because you put a lot of volume in. I wasn't. I was position trading. I wasn't putting anywhere near as much volume as I do on indices through them. It's just, it's all smoke and mirrors. Everything in this industry is smoke and mirrors. Just have to accept it. Everything's the cost of doing business. And it's a bloody expensive business. So that's the way it works. AJ, Euro yen on the reverse? Yep, probably. Yep, coming off of ADR, coming off of support. Not coming off of support, sorry, coming off of ADR. That's what I mean with these. With this Swiss, there's pound Swiss just at ADR as well. Pound's rallying. Got big move on the pound. Well, it's big. The pound is moving. Yeah, so with this Euro yen as well, you'll probably find that one is switching along with the Swiss. Swiss is not having so much luck, but this could also just be a flag. And they're going to rally back into the yen. No news today. So we're just reliant on any other news coming out. Putin is meeting Kim Jong-un on Tuesday. I'd love to be a fly on the wall in that one. Putin and Kim Jong-un. It's like a child meeting God, isn't it? Basically. He's going to be can you make me some nuclear weapons? Yes, I can, little man. If you were a world dictator like Putin and you wanted to bring someone in on your conflict, would you really pick North Korea as your ally? The guys can't even shoot missiles straight, for God's sake. Maybe that's what it is. He wants North Korea involved so that they can accidentally shoot some missiles into Poland because they've got rubbish aim and start World War III. Maybe that's his plan. Accidentally get North Korea to start it. Thinking like Putin. Your broker just switched a bit, yeah. Feel like before going to a new broker, you should show them your track record and say I'm a profitable. So it doesn't matter. You get better execution when they are trading against you because the orders are filled instantly at the price you want. Because they don't care. They're assuming you are going to lose all of your money. So you get better execution and tighter spreads when you are being traded against by your broker. So it's actually in your interest just to sign up and go, hi, I'm new. Here's my $1,000. The trouble is when you rock up to a broker and go, hi, I'm new. Here's my $30,000. They go, you're not new. Because there's nobody new putting 30K in a brokerage, is there? Yeah, so they kind of know. They're not stupid. And to be honest, you start to run out of brokers anyway, so you end up going back to the same ones again. And I hate moving brokers because honestly, it is an absolute pain in the ass going through all the filling out the form, sending your passport, and it's just a pain in the backside. You don't want to do it as very often if you can possibly help it. Right, I'll leave it there. I'm coming back this afternoon at 2:20 for the US session. I'll keep an eye on this DAX this morning. Should have already got out at 3R, but if I'd have known that, I'd have got out at 3R. But we'll see where we go. I've got a feeling it's going to be one of those today. So I will reevaluate it as we go. I think really this either needs to break back up from here or gap fill. What I would prefer this to do now is gradually grind down to here this morning. I will exit at the gap fill, I think, and then try and get out of the long on a pullback from the gap fill. But it's a bit of a crappy one today. So, going to say there's some brokers that let you trade directly on spot FX, but they limit leverage. Yeah. Well, if you're trading spot FX, you're actually doing currency conversions. So someone like Interactive Brokers, but you need a lot of money to do that, which is why the leverage is tiny. So it's not worth doing. You're better off. I say just don't worry about brokers. If you pick a big regulated broker that's been around for years, you can't go far wrong, which is why I use people like IC Markets, Forex.com, RoboForex, DarwinX, IG, the big boys, FXCM, any of the big boys. Just use the big boys because they're heavily regulated. You have a lot of comeback with them, and they know what they can and can't do without getting a slap across the wrist. The new boys out there that try and pull the wool over your eyes, new brokers, a year or so, young brokers, they will be the ones that will rip you off left, right, and center. You'll get spread like 2 ADR at the swap. Yeah. And you'll go, you can't do that. And they'll go, you just signed a contract. And you'll go, and you'll walk away. And they will have taken all of your money. Eventually, the regulators will catch up with them and go, here's a fine. And they'll go bust. And then they start up again as a Phoenix company the next day. There's a lot of them about. So stick with the big boys. You'll be fine. Try not to think about it too much. Go with a biggie. The white box at the left side is part of your EA, yeah. It's just giving me data, basically. It just gives me the ADR ranges and just tells me what the profit is at the minute, that's all. Just info. But it's basically the opening range breakout at the end of the day. So I've put a set file in the Telegram group for replicating the hedging with the ORB EA. If you want to do it, there's a set file that will do it. Just have to set the stops fairly wide. Right, I'll leave you there. I'll be watching these ones today. Pound US dollar is on the roll nicely. So hoping we can get some decent headway made on this one today and get some continuation weakness on this US. So we'll see where we are this afternoon. So I'll be back at 2:20 for the US session. We'll be trading the NASDAQ, the DOW, and the S&P. We'll see how we got on with the DAX this morning. But I'll be in Telegram if there's anything else you need. And I will obviously post what I do with the DAX in Telegram as well, if I do anything with it. At the moment, trying to bounce again, look. So who knows? Might be a good time to get out the shorts, but we'll see. I'll leave it for the minute. All right, so have a good morning. Anything you need, let me know. I will be in Telegram. Otherwise, hopefully see you this afternoon. If not, same time tomorrow. Back to 5 days a week now. So same time tomorrow, 7:50 for the DAX session. And yeah, hopefully see you guys this afternoon. Have a good day.